Excel accounting practice problem. Sales receipt and deposit. Get ready because we're going to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet. Now we're entering transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last presentation. Example tab in essence being an answer key. Let's take a look at it now. We're going to be entering transactions related to what would be called a sales receipt type of form in software such as a QuickBooks, which you can kind of imagine as, in our context with the guitar shop, we have sales that are being made at the cash register in the store. People bring in the guitars up. We ring it into the cash register and get paid at that same point in time. We will be dealing with inventory with these transactions as well, and a perpetual inventory system, making it a little bit more complicated, and then we'll make the deposit related to it on down below. Let's go to the practice tab and work it out. So we're going to say that this happens on, we're saying the date of the 2/20. So we're going to say on 2/20, and the transaction related to us making a sale kind of at the cash register, which would be a sales receipt type of form in accounting software like QuickBooks, would be then we're getting the money, which we're going to put into undeposited funds, which will then transfer to the checking account. When we group the funds in the same format, we expect to see them on the bank statement. We have then the sales tax that we're going to have to be dealing with. So the rest of it looks a lot like an invoice. And then we're going to have the sales on down below. We also note, and I'm going to separate the two transactions because the other part of it is the decrease in the inventory and the related cost of goods sold. The debit to the cost of goods sold, credit to the inventory going down, cost of goods sold going up. Let's do some indentations here. So we'll put some indentation right there, an indentation here. There's going to be our transaction. I'm going to build this from the bottom up now by thinking first about the cost that we're going to be putting in place when we make these sales. So let's go all the way over to our subledger for the guitars that we are selling. All the way into our inventory subledger, we're going to be selling one of these ELPs. We sell a lot of the ELPs. This is happening on 2/20, I think it was, and the date or the amount that we're going to sell in the cost of goods sold column and CO is going to be two of these at a cost of 400, 2 times 400. So we're going to then be charged. We're going to have a cost of 800, not the sales price, but the cost. And then we have the 2, the 400, and then the 2 times the 400. Bring over the 800 to the ending inventory, subtracting out 5 minus 2, giving us 3 at the 400. 3 units left at 400 would then be the 1,200 left in ending inventory. We're out of balance by the 800 now until we record it to the trial balance. We're also going to sell one of these EPSPs. So these are the amounts that you can imagine populating basically the sales receipt that we're putting in place. So this is going to be on 2/20. The cost of goods sold for these, we're going to sell 2 of them. They cost $480. The 2 times the 480 gives us the 960. And we'll just pull that over into our ending balances 2. And that leaves us then, if we had 6 units, we subtract 2 because that's what we sold at the 480. So we got the 4 times the 480 giving us the 1920. So we got the 960 that we sold, and we sold the 800 for a total of the 1760. That's going to be the decrease in the inventory and related cost of goods sold. Let's go all the way back to the left to record that one out into our journal entry. So I'm going to go down to the cost of the goods that are sold. I'm going to say this is equal to, I'm going to find this from our subledger. You don't have to do this. You could just type in the number, but it ties it out a little bit more nicely. And so I'm going to do it this way because I think it would be good to do. We're going to say with the 800 plus, you can't pick up this number up here, by the way, because you'll get a circle reference. So don't do that. Plus the 960, or you can do that. You could check out what'll happen. It'll cause a problem, and fixing problems is the way that you learn the stuff. So that's going to be the cost of goods sold on the one side. The other side's going to be inventory going down. And then we're going to say on the sales, which may be simply marked up from the cost, but it's not exactly, doesn't have to be exactly. So the sales price will differ, whatever we're selling the guitars for, which would be in software by the item. So it would know by the items that we set up with the sales price and the flow assumptions for the cost. I'm going to do it this way. Equals negative to make it a negative number. We're selling $600 times those 2 guitars plus the 1 guitar we sold at 500. No, we also sold two of them. So we had 2 guitars we sold at 600, the other 2 guitars at 500, and that'll give us then our 2,200 we sold them for. We're going to say that we have sales tax that we're charging at 5% because that's what whatever state and local government in the United States, it's a state and local tax, same as a usage tax some in other countries and whatnot. That's the tax that we're forced to charge. So we're going to charge another 110. And then the negative sum plug formula means that we're going to get in terms of the funds at the point in time we made the sale, because it's a sales receipt transaction 2310, getting paid either with a credit card or with cash or whatnot. We're going to put that into the undeposited funds. Let's make the journal entry now. Before I do, however, I do want to clean up our transactions on the right-hand side because I want to copy the ending balances over. So I'm going to copy these ending balances here. I'm going to select those and Control C, and I'm going to paste them into the beginning balances, pasting them 1, 2, 3, and delete the stuff in the middle so we can just focus in on what we're doing at this point in time, the general ledger giving us more detail for the entire month of activity. So let's do it again. So we got the undeposited funds. Undeposited funds is going to be up top, second account. We're going to say this equals, scrolling down to that 2310. And then we're going to have the sales tax. So the sales tax is down here in the liability area. Sales tax is going to be equal to the 110. Notice these are balance sheet accounts, so there's going to be no difference between the year to date and the February numbers. There will be a difference in total when we get down to the income statement numbers. Then we've got the sales, which is going to be down here. So this is going to be equal to the 2200. So that increases. Notice this is the February number now. So now we got income or net income on February and the year-to-date number on the right, which includes the activity from the prior month. And then we're going to have the cost of goods sold. Cost of goods sold here. That's going to go in the cost of the goods that are sold. And then finally, we've got, and that of course accounts the income statement numbers as well. So these two being the difference in the activity that has happened. So if we talk about just the month of February, we had a loss before, 346, and then we had this change, this difference that happened. So now we're at net income of 94. If we look at the year to date, we had 7,081 net income. Before this transaction, again, there's a change increase of the 440 up to the 7521. So there is that. So then the last one, we have inventory up top to get us back in balance. Did we record the inventory? No. In I7. I7 equals the inventory. And so there we're back in balance on the inventory. So that looks good. Let's check and see if our subledger is back in balance. So if I go all the way to the right to the subledger, the subledge is back in balance given by the green 0, the 7938 on the subledger. Okay, so we're going to run this back again. We're going to imagine we make another sale that we're going to put in place. Now that we're over here already, let's just imagine the units that we're going to sell. So we're imagining we're at the cash register. They brought up more guitars, and we're just going to put them into place. So one was an EPR. This also happened on 220, which is going to confuse things a little bit, but that's okay. We're okay with it. Could have been a different date. You could have made a different date, but no, they're on the same day. We sold these on the same day. We sold 3 of those at the 440. So 3 times 440, bringing that to the ending inventory, 3, 440, the 3 times the 440. We had 5 units. We sold 3, so we have 2 left over at the 440. The 2 times the 440 is going to give us the 880 that are left at this point in the time. Then we also sold one of these the Gibson guitars. We sold one of those on 220. So we're going to say on 220, we sold one of those as well. And we sold one at 304. 1 times 304 is 304. Ending inventory 304. 1 times 304 is 304. We had 5 units. We sold one of them. We got 4 left at the 304. The 4 times the 304 gives us the 1216. And then we sold one more. We sold a ukulele, which is down here. The little ukulele at 120. And so we sold 2 of those at 24. So we're going to say this equals the 2 times 24. And so that's going to be the 48. So the 48 on the ukulele. And let's bring that into the ending inventory. 2 times 24 gives us 48. We had 4 of those ukuleles. Minus 2 gives us 2 left over. They cost $24. 2 times 24 gives us 48 left over. So we have then the 48 here, and then I'm holding control, the 304, and then I'm going over here, I'm holding control, and the 1320 adds up to the 1672. That 1672 ties out up top, so that's what we're out of balance by until we actually record the transaction. So let's put that into our transaction. This would be like a sales receipt, going all the way to the left type of form if you were using like a QuickBooks type of software or something like that. Same thing that we did last time. 920, same accounts. I'm going to say undeposited funds goes up because we're getting paid in some way, shape, or form, cash or credit card or something. The sales tax we're going to have to charge because somebody's charging it. Someone is forcing us to do that. If we want to stay in business around here, you need protection. It's going to cost you 5%, 5%. And then we've got the cost of goods sold, and then we've got the other side going to inventory. There's our transaction, similar to an invoice, except for the fact that we have the undeposited funds going up top. So then we're going to do some indentations. Let's indent these two because these are credits, and indent that one because it's a credit. Let's start at the cost of goods sold because that's what's going to be tracked on our subledge. I'm going to say equals, go all the way to the subledge and try to recalculate what we did. So this is what would be pulled up from the form. We said we had one ERP, and it would then record on a perpetual system the 1,320 plus the 304 plus we have down here the 48, and enter. I think that's it. I think that's the right number. Let's hope so. We'll check it out. If it's not, we'll find out. We'll find out later. We'll find out. And so then we're going to say that the sales, I'm going to say that the sales line item is going to be equal to negative brackets. We're going to say that we sold two of the guitars we sold, or the ukuleles, cost $32, plus we sold 3 guitars that cost $550, plus we sold 1 guitar at $380. We're going to say those would be determined by the items. If you were using something like a QuickBooks type of software, the item would know what the sales price was, so it could then populate it very easily on a data input. We have to be charged the 5% sales tax to the people that are protecting us. Got to pay for the protection. So they got the 105, and then the negative sum is going to be here. The government are those people, but usually, I mean, you know, whoever you got to pay for this 5%. So there it is. So then now we're going to say, let's post this out. Undeposited funds is going to be up top. It's going to be up top is here. We're going to say F2 plus F2. Scroll on down, and we're going to pick up the 2199. And then we've got the sales tax payable. Sales tax payable is going to be right here. Something's in it. So F2 plus F2. Scrolling down, we're going to pick up the 105. And then we've got the sales here. So sales is the next one. That's right here. I'm going to say F2 plus F2. And that's going to be the 2094. Bringing it up. And then we've got the cost of the goods sold is the next one. Cost of goods sold is going to be right here. F2 plus F2 is the 1672. And then finally inventory. Last item of the inventory up top. F2 plus F2 Scrolling down to the inventory. There we have it. That puts us back in balance again. Back in balance again. I feel like there's a song somewhere there, but I don't know exactly what it was. Since, any case. So there we go. So there's the two transactions that we had. Here's the impact on net income. This is what we had before for the month, and then it changed by this. So now we've got net income instead of a loss. This is what it was from year to date for the 2 months, and then it changed by this, and here's what we have at the ending point. So now we need to, let's check to make sure our amounts for the inventory matches the subledger. So we should be at the 6266, just to make sure we got that done properly. So there, we're back at 06266 here. So that is proper. That looks good. I screwed up something here, so undo. Okay, then I'm going to go all the way to the right. Now we just got to post it to the ledger, to the GL as well. Let's do some highlighting so I make sure I don't pick up the wrong numbers, especially since they look very similar. 2 transactions, same date. So I'm going to highlight this one, make it green. And then say, okay, undeposited funds is the first one. That's the second account over here. So undeposited funds is going to be on 220. And we're in R5 equals left to the wall down to that 2310. There we have that. Let's record both of them at the same time, actually. We'll get fancy. So I'm going to make 2 of them green. I want that one green. And then this one, I'll make like a different green, number 2. Green. Let's make it like that green. So that also happened on, why do I have 920 here? It should be 220. Sorry about that. 220. That was weird. Okay. A little tired. 220. No excuses. So 220 on the second one is going to be here. Left. Down. We're picking up that 2199. So then that puts us at the 4509. That should match what's in the trial balance, the 4509 in both year to date and February. Then we've got the sales tax payable for both of these, mirroring the 2 transactions. Sales tax payable is the last orange or liability account. So we got the assets and then the liabilities. So we're over here in the sales tax payable on 220, and 220. We're in AP 17 equals left to the wall. And then we're going to pick up that 110. We're going to do it again. Equals the AP 18 left to the wall. This time we want the 105. 105, bringing the amount from 2344 up to 2559. That 2559 also on the trustee trial balance right there. So now we'll do the last part, which is sales here and sales there. There's the sales on the trustee trial balance. It's going to be the same in the general ledger. We've got the assets in green, liabilities in orange, equity, and then we're looking sales up top in awe 5. We're in awe of the sales this month. It's awe-inspiring. So then we're in AX5 equals left to the wall, scrolling down, and then we got the 2200. I'd call it awesome, but it's more like awe-inspiring and then some. Awe-inspiring and then some. It's a level up. It's a level up from awesome. So there we have the 4687 up by the 2200 and the 2094, giving us the 51170. 51170, awe-inspiring and then some. That's going to be our total number over here for the year to date, and then this is our just our February number, so it matches out the trial balance. And then we've got, so that's these, all these. So let's unbluify these and do the second batch of stuff. Let's make that blue, and so we'll make this one. We want that blue, which is the Excel is Fun blue. From the Excel is Fun channel guy. He got good stuff there. Very helpful. So we're going to make it the blue and the green again. So then we're going to say we got the cost of goods sold now. So that's going to be our third account. So cost of the goods that are sold. Cost of goods that are sold. This is on 220, 220. So this is on BB5 equals left to the wall. Left to the wall down to the 1760. And let's do it again. So now we're on BB6 equals left to the wall. Scrolling down to the next one, we're on the lighter green 1672. So there we have it, bringing us up from the 37,242 on the year-to-date numbers to the 40,674. That 40,674 should match what's on the trusty trial balance, which it does on the year-to-date numbers. And then this is where we have for that current time frame. Notice this current time frame would match to the activity, just by the way, that 3432. So if you want to look at the GL, and if I was to run the GL just for the current month without the beginning balance, then of course we would have these two items, which would be the 3432. And then we have the beginning balance from last month that makes it go up to that 40,674. Same with the sales. These two items add up to the 4294. That 4294, of course, matching what's happening in just the current month thus far for the 4294. Okay, so did we record? Now I forgot where I was. We didn't record the last piece, which was inventory. Inventory now also needs to be done. That's the fourth asset account. So I think it's down here. We put it down here. It's kind of hidden down there. This is on 220. And then let's do two 220s. 220, 220 equals V25 left to the wall. And then we'll pick up the 1760. And let's do it again on V26 equals left to the wall, the 1672. That brings us from the 9698 down to the 6266. That 6266 should match the inventory up top here of the 6266. These being the same on both sides because these are the permanent accounts that didn't close out, so they're the same for the year-to-date numbers as well as simply the month of February numbers. So I think that's everything. And we're now going to record one more transaction, removing the amount that we're going to imagine we're going to the bank now, and we're grouping these deposits that happened on the same day in the same deposit into the checking account. We're going to reduce then undeposited funds, put them into the checking account. This would be done with a deposit type of form in something like a QuickBooks. I'm going to make these two last cells blue down here so we can do this. So let's unblue this stuff. I'm just going to select this whole thing and ungreen it, bluify it, make it blue, ungreenify it. In other words, another way to put it, I guess. Home tab, and then we're going to hit the paintbrush. And let's paintbrush you a little bit more room down here because this will be a quick transaction and we can still fit it on the same sheet without having to add another sheet of blue. So we're going to say this happened on 220 as well. We're going to be picking up the checking account, which is going to be going up, checking account, and then deposit. And then the other side going down is going to be undeposited funds for the amount. Let's say undeposited funds. And I'm actually just going to indent this one. Let's indent the credit. And I'll pick them up this way. I'll try to say this is going to be equal to the undeposited funds here and here. You could just type in the number, but because we're rounding, we're going to get some rounding error. So this will be a little bit more exact. So you get the pennies this way. In other words, if I was to add pennies, there's pennies involved. So it'll give us less likely to give us kind of a rounding difference down below, which is rounding differences aren't a big deal. We'll round them out. But we'll then going to say this equals the 4509 here. And there we have it. Let's post it out. So I'm going to go to the checking account up top first. We'll go up to the good old checking account and check it out. So now we're making the deposit in I4. I4 equals, scrolling down, picking up the checking account of the 4509, bringing it up from the 98,344 up by the 4509 to the 102,852. Going to bring the undeposited funds down now. Here's the undeposited funds. Double clicking on it in the trial balance. Going to say plus and then scroll down and pick up that undeposited funds and enter, bringing it back down to 0, which is what we want to do because that is a clearing account. Now, again, you might go and look in this and say, well, why didn't I just make this easier by making this first two transactions going directly into the checking account instead of going into undeposited funds, which necessitated another journal entry down here to get to the same end result with regards to the ending balances. And the reason is because if you deposited those first two into the checking account, they would appear on your books as two transactions, and they would appear on the bank because we're imagining these are grouped either by the credit card company or by us going to the bank and depositing them as one amount, making the reconciliation more difficult. So you gotta think about the ordering of the transactions in the checking account so that we can reconcile as well. So for example, if I go into the checking account and post this to the checking account here, then on 220, we're in N8 equals, scrolling to the left, scrolling down, we're going to pick up that amount in the checking account of the 4509. So now in the checking account, we've got one amount of the 4509 instead of two amounts into the checking account detail, that being important because we expect it to be mirrored in that format on the bank statement, which we're going to have to tie to when we do the bank reconciliation. Undeposited funds over here, you get to see the activity. So you still have the activity in undeposited funds, seeing the two individual deposits that can then, of course, be tied back to the sales receipt, which would give you the detail of the sale and everything involved in it. So this happened on 220. We're going to be saying this is an R7 equals left to the wall. R7, scrolling down, we're going to pick up then the undeposited funds of the 4509, bringing it back down to 0. So we're back to 0 in the undeposited funds, matching the trial balance. We're at the 102,852, matching the trial balance in the cash. We're back to 0 up top in the posting to the general ledger, and our general ledger year-to-date number here for net income matches out the year-to-date number on the trial balance as well. So one other thing I just want to point out here, note what is not being recorded when we enter this into the system this way. Because we don't have accounts receivable involved, we didn't have to record anything to the subledger for the accounts receivable. And that means we're not tracking the sales by customer this way. So we can't really run in this accounting system a sales report by customer in this format, right? And if you were in a QuickBooks system or some accounting system, if you're able to enter the customer name as you make the sale, which sometimes you might do or you might not, right? I mean, if you're at a restaurant, you don't have to give them your name, or something like that every time they make a sale. But in some cases, you might want that added information, even though you don't need to call them and track them, so that you have that added information. You can get some information about your customers that way. So that's another thing that you could have an added level in like QuickBooks software to add basically registers for your customers, even if they're not going through the receivable, but you'd have to think about how exactly you're going to do that. Typically that would be done in software by using the sales receipts and the invoices, which typically require a customer type of field. In any case, here's where we're ending off here. This is the balance sheet accounts. These are the same for the year to date and the current month. Income statement accounts will differ due to the fact that we closed out the items for the month activity, and these are the beginning balance with regards to the year activity. This is our monthly net income before the change that happened for the sales receipts. Here's our monthly net income after. Here's the year to date activity with regards to net income, the change here, the year to date after that.